Gold stayed bullish for the week. It has achieved 20, 40, 42 zone. The critical resistance, it has yet to break beyond this zone. We have mentioned several times in our daily and weekly review. 20, 40, 42 is the zone for the week which is going to play a critical role. Now on the downside, why these candles are important? See, we have seen bigger bearish candle, then a smaller body and a bigger tail in the preceding week, and that is why we can see we have expected it to rise, and that is what has happened. Now what to expect from gold in the coming week? How to profit? What is going to be our strategy? Is it the good time to buy gold? Can we expect it to rise more? Everything is going to be answered here in this update. Watch till the end. If you have not subscribed to the channel, subscribe and press the bell icon to get twice a day analysis which I share for gold. First with the Asia session, next with the US session. Do like, share and comment as well, friends. Your every like, comment and share is a great motivation for me to deliver to the best of my abilities. Towards the end of this update, I will be sharing the trading levels and strategy. Watch till the end. Yes, do join the channel memberships and get the additional benefits. Let's start. See, on the monthly charts, this is yet a red candle. We have seen lower highs, lower lows. It is going to remain in range. That is what it appears. Now, see, we have already seen it getting a little resistance at around 20, 40, 42 zone. And I have mentioned earlier as well, and now I am sharing it again. If in the coming week or any point of time in next couple of weeks, if you see gold is staying above 2065, 2060 zone, you can consider that it is turning bullish, and we will look forward to 2100, 2120 zone. Right now on the monthly charts, one must look at what it is. See, the monthly candle is about to close. We have seen these three candles. Also, you have seen the bullishness getting diminished with every candle here. You can see the body size getting smaller. Now, after that, we have seen preceding month a red candle, and this month it has achieved lower highs, lower lows. Thus, it appears that possibly it might try to remain in range and close in doji. If it has to trade even bearish in the coming month, it may try to close the month in a doji, which means wherever it goes, only and only thing is it should not break 2065. As long as 2060-65 zone is not breached, we can again expect it to come back to the same levels at around 2035, 2040. Now also one must look at the movement in gold here. Rise, retracement towards the 20 period, higher highs, and there is a possibility of a retracement towards the 20 period. Possibly it may take one more month. In March, possibly it can try to move towards this level. This is one possibility only. Yes, this is what I am looking at. If you look at the stochastic, this was overbought, trying to look downwards, trying to stay bearish. But look at MACD. See, this was the bearish trend. It has crossed over. Yes, the rise is gradual here. The slope is gradual here. It means that it is still in the retracement zone. But if you look at the candles are still staying green here. It has not yet crossed over on a sell side. So, even if it tries to touch the 20 period moving average in the coming month, possibly it could bounce back again. RSI is staying flat. Coming to weekly chart. Now, this is important on the weekly charts. Why? Look at the movement here, coming to 20 period, coming to 20 period, coming to 20 period, and again, yes, it tried to drop below 20 period moving average, failed to close below, and it is taking support from the 20 period, trying to rise. That is the first part. Second part, it is a nice flag formation here, lower highs, lower lows here. You can see it is a nice flag formation. Thus, it is very, very important for gold. If you see it breaking beyond 2060-65, consider that it is a beginning of a bull run where the prices are going to stop at least towards 21, 21, 20. And in fact, on the upside, we may see 22 as well. Because see, gold is trading with the moderate bearish bias thus far. And when it starts to reverse, it is going to be a stronger. Right now, as I said, do not treat this as bearish, or do not treat this even bullish as well, if it, as long as it stays below 2060-65. On the downside, now very, very important, on the downside, 2010 levels are going to play a major role. If you see gold staying below 2010, we can expect 1997 the first target, and then below that we can expect it to move towards 1980, 82.5. Below that, 1972.5 will come into picture. A complete reversal from the current levels, I do not expect, I do not see this happening. What has happened here? Two red candles, then a bullish candle, two red candles, then a bullish candle. So yes, it can in fact give two red candles, but let's see, we have to wait for it to break below 2010 levels in order to confirm the bearishness. Stochastic has dropped enough, trying to and if you look at this vertical rise, retracement, and this could lead to another rally for next few weeks. But look at the on the MACD, first wave, second wave, the third greener part is done, and it has crossed over for a selling entry. Now after crossing over for a selling entry, we can see very minimal divergence, and the coming couple of candles will decide the direction it wants to take. If we again see couple of red candles, then yes, more divergence, and you can say that right now the bear. So on MACD still there is a dilemma that whether it is going to give complete reversal or it is still going to drop below to 2010 level. So on the MACD right now it is bearish. This is one indication which is not suggestive of bullishness ahead. RSI trying to look upwards, trying to show modest bullishness. Coming to daily. Now look at daily charts. In my daily updates, I have mentioned this. Just draw this. I have mentioned why 20-40-42 is a greater resistance beautifully on Friday. On the last trading session yesterday, we have seen it achieving the levels. Now, does it mean that it has achieved the highs and can we expect a reversal? This is what we have to see on the very first trading session. If gold stays above 2042, you can expect that we will look forward to 2048, 2050 as the first target zone. Then 2055 is there, but I will expect it to move towards 2060-65, which is going to be a very strong resistance for it to break past by. Any move above that certainly should be signs of reversal. Now also look at the daily charts, the drop, the retracement. The retracement candles are smaller, the drop was sharper, lower highs are seen, thus I will not still treat gold as bullish. The next observation here is the bearish cross in the moving averages, and they are still on the sell side. We have to wait for a crossover and divergence, which means couple of bullish candles from here. If you look at a stochastic, this is near to overbought. MACD has crossed over here, trading with divergence. Third bullish candle, it can yield more bullish candles here. Rise, retracement, crossover here can lead to a stronger run from the current levels. Look at this, and this can lead to a rise. RSI is rising as well. Also, let's have a look at the 4-hour. Now, on the 4-hour chart, see the drop started from here. It has retraced back to the same levels. Now, this is going to be important again, and that is why I have mentioned first you need to watch out at 40-42 levels. Also, look at the rise here, then the retracement towards 2050, and again a bullish breakout. Then the next observation is the crossover between the 20-50-100 period moving averages on the 4-hour charts. Now, on the downside, first is there are greater resistances 2018-2020 zone first support levels, also 28-30, that is previously was the resistance, is now going to be the support, then 18-20, and then to 2010-2012 levels. So three support levels, very strong support. If gold stays above this, we can expect a bounce back, as below 2010 is where slight bearishness will be seen, and then we can look forward to 1997 and below levels. So now we have seen the charts. Let's have a look at the stochastic is overbought, MACD crossing over here, again trading with divergence. More bullishness can be expected. RSI looking down. So now we have seen the charts, we have seen the indicators. Time for me to give you the trading levels and strategy for the coming week. But before I give you the trading levels and strategy, if you want to learn this art of trading, be a part of my 29th mentorship batch commencing on 4th of. Equip yourself with the tools, strategies, and trade setups which can help you trade profitably. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Also, you can be part of my signals channel on Telegram, where trading as per the signals you can benefit. First, let's talk about the levels to buy. Yes, you can buy here at 20-40-42 zone. Very stronger resistance here. Beyond this, I will look forward to 20-48-50, the nearest resistance. And if gold stays above this zone, we can look forward to 20-62.5, 20-65 levels. This is going to be the next milestone here. This is something you should watch out for. Any breakout beyond this is going to remain critical for gold in the coming week. Beyond this, if not in the next week, in next couple of weeks, the target is going to be 2100, 2120 zone. Very soon, these levels will be seen if gold stays above 2060, 2065 zone. Yes, we are looking forward to a stronger rise. In between 2050 and 65, see, whatever resistance is here, it is only going to be in between 50 and 65. We can look forward to 2055 as well. But once it breaks beyond 2060 to 65 levels, though the targets are going to be 2120, 2100 zone, we can look forward to a median resistance at around 2084, which is going to be also a good level for you to watch out for. So take your positions accordingly. Beyond this, sky. is the limit on the upside. But these are markets. Right now it is range bound. As long as it fails to break beyond 2060-65, we should not be treating this as bullish. Let's talk about the levels to sell. I will recommend you to sell here at 2028. But even if you are selling at 2028, 2024, see, on the downside, the support levels are very, very strong. Now, this is going to be the first support level, 2020, 2018. We have seen it last week also, these levels playing out well for gold as a resistance and as a support. And below this, we can expect the 2010, 2012 is the zone you should watch out for. This is going to be a stronger resistance for gold to break past by. If it breaks below this, you can say that we will look forward to 1997 levels, and then below that 1989, and after that I will expect 1972. If not today, but then in next few weeks we can, or next couple of weeks, it may try to move towards 1972 and 1950 levels. Chances for this appears to be less as of now. A possibility of a rise exists this time. Thus take your positions accordingly. Stick to the levels between 2010 and 2060, 65. You have to be trading with caution. Trade accordingly. Like, share, subscribe, and comment. Watch the daily updates as well. Join my mentorship batch webinar series, and do join the free Telegram channel where you get the live market updates. Else, be a part of my platform forexfunda.com, where you get the live market updates. There also you can schedule a call with me if you need any consultation or guidance. Thank you very much. Have a great profitable trading week ahead and a happy weekend. Thank you.